Today there was news. It was 4th of June, Friday. This is the day for NFP and employment change for USD and the Canadian dollar. And this day I'm gonna see that the market was really influencing the prices, and I came to realize there is a much big correlation between this news and the trends that I'm seeing on the chart. If you can see at Euro USD fiber, looking at the 4-hour chart, you can see drawing this Fibonacci series from these lows to this high. You can see at this point on the green zone, there was a likelihood of a pullback, and this price exactly reacted due to this condition. This is a fair value for which the institutional traders are trying to buy at a very low price, and that's why they were accumulating their orders here. So the news pumped, due to the news, they created the FUD, and the institutional traders were offering the prices at a higher discount, and this is what has been happening. You see, the 1 minute strategy. Looking at this 15:29, 15:30, that's 3:30 p.m. on my local time. There was the release for employment change both for US and the Canadian dollar, and you can see that is what definitely caused this market to rise. You can see how many pips, 40 pips in 1 minute. It was around how many pips? It was around 28 pips, and up to now it has gone more than 50 pips. You can see that's a thing. That's a theory I'm developing, and in fact I'm going to really trade on this strategy, and I'm looking forward to trade it live. You know, once I identify this structure in any one of the USD pair or Canadian pair, identify this structure, then I build my hypothesis. Euro gonna be stronger than the dollar, so the USD will going to fall, and any other currency pair will going to rise. That's hypothesis on any of these currency that has USD. Let's look for the GBP. Maybe you can look for which currency pair, USD, JPY, the same thing. Look at the 4-hour chart. You can see the same thing is happening. And we are looking forward to reach this zone. This zone. Going to 1-hour chart, you can see the trend is just the same. And I've cracked their cheat code. These institutional traders, they will not be playing with me in terms of directional bias. I'm going to cook them. This is the same thing. This is what has been happening. I'm looking for a sell for any USD pair. USD becoming weak, and so I'm looking for a sell. So if I'm gonna take this trade on the USD JPY, the first minute it went almost 30 pips, and if I'm gonna wait for around how much pips? For around this much time, I'm gonna make 40 pips. You know, this is something I'm going to anyway, and really I'm going to trade on this strategy. Looking at this this strategy, you can still take this trade when it comes back to the equilibrium zone. So if I'm gonna add positions here, 10 pips stop loss, and just risk and get more trades. You know, this is a strategy that I'm gonna really trade this strategy. You're looking at the USD, Euro USD, looking at 1 minute, the same thing, the same stuff. I'm gonna wait for a pullback if you want to add more positions, and still you're gonna enter at a premium price or a discount. You can see the same thing. You know, this strategy is very, very good, and I'm looking forward to trade this strategy and perfect it on it. Let's look at Euro USD Canadian. This one, even in 1 minute, was forming optimal trading entry. Price was being offered at a discount. I'm gonna sell up to here the first minute. It went only 20 pips, and then later it went more than 40 pips. Haha, looking at the 4-hour chart, the same thing is happening. Oh, yeah, true. The same thing is happening. Really, I think I've been having a lot of problems with understanding how the market is doing or playing, and I am sure I'm gonna trade on this strategy. I will risk it. I will risk it. The 1 minute strategy is currently present, and I'm going to risk this strategy. I'm really going to risk this strategy. Well, anyway, if let's make it out USD. DSD was not really playing a good sign, but there is one thing that I'm noting, that if you look at the Fibonacci extension, if it's forming on the lower side, like this one, drawing from the upper side to the second of the lower side, then rejection here at target 1 or symmetry, like in GBP USD, it was forming on a symmetry here. Those are good areas for entry. And let me look at 4-hour chart for the cable. I'm gonna load another chart for cable. Okay, 4-hour chart. If I look at the 4-hour chart for the cable, drawing for the Fibonacci, wow, exactly at this point, exactly at the optimal trade entry zone, we will look for an uptrend. And then this news, actually, though I wouldn't enter this region, but the equilibrium, this is a sweet spot. This is a sweet spot, and exactly, if I go to 1 minute, it touched the equilibrium zone, and it was just a sweet spot for entry. And taking the bias on the other chart, it's apparent that as long as I identify the condition for USD, if it will be bearish, then all currencies, whatever the trend, whatever the case, they are going bullish. The GBP has gone more than 60 pips. Imagine 60 pips. Anyway, I've calculated the markets, and this is what I will do. If I am trading $200 and I'm targeting 40 pips, then for $200 I put a lot size of 1. So for 50 pips, for $200 I'm putting a lot size of 2. So for 50 pips movement, that's equals to times 2, 100,000. So for 20k I get 100,000. Can you imagine? 100,000. So in case for the first trade, I make I start with the 10k, and from this 10k I make around 50k. Imagine, you can do that. It's possible. Then you withdraw your 10k. Then from this 50k, I use a lot size of 5. Then I go for 50 pips. That's 250k. Imagine, you remove your profit, you subdivide by 2, so you're gonna make times 500,000 plus that 200,000 you have. So you have 700,000 shillings, seven times. So in these 7 times you risk, you divide by 3, so you risk 3 trades. So you say 2,000 by 5. Wow, I think this is the way. I really think this is the way. Wow. The market is playing really well. The market is playing really well. I divide by 2 times 5. Wow! I think this is a strategy, and I'm gonna test it. Next time I'm not missing this trade. Next time I'm not missing this trade. The first Friday of every month. Let's look for the next month. The same scenario would be playing July 2 employment rate. Same thing. Listen, if I can be able to target the same entries, that's the first strategy. And the first news next month is Canadian, then followed by, I think, I will try to look for Audi, but I don't trust that one. So we have NZD, those 1, 2. So we'll be having 2 trades, then another 3 trades, and then from there we have 3 trades. Let me look for another trade. So we have 3 trades next month. So if I have, if I'm trying to risk 50k, an equity of 50k, $500, and I'm risking $100 per trade. So I'll be having how many times? 5 times. So for those, okay, maybe I try to start with 60,000. I divide it 3 times. 3 times, so I'm risking 20k. So if I'm dividing for those 3 times, the first trade, it goes wrong, so I'll be losing 200. The second trade, I'll be having 40. The second trade, I lose also. I'll be having 20k. The third trade, I'm gaining times 5. How many? 100k. So I'll be having 120. So I'll be doubling that account. That's the first scenario. And the second scenario, the first trade, I'm gonna have 50k. I'll be gaining 100,000. So my total will be, the second trade, I lose 200. So it'll be, the other day I win 3,000 or 100,000. Then I'll be having 240. Imagine, if you get all the correct move, you'll be having 1,600. Then the second trade, 1,600, you have 2,600. Then the third trade, have 3,600. And if you increment by compound interest, first trade, 1,600. The second trade, 5,000. Have 6,600. That trade maybe lose. So I'll be getting 5,600. If you got it the last time, you got it, and you make another $5,000, you'll be having 1.1 million. 1.1 million. It's possible. So try this. Try this. There's no other time to try it. Just believe in yourself and you try this strategy. I'm gonna beat the market.